Good morning, traders. Welcome to the Phoenix Bloom morning update for Wednesday, the 2nd of March. Today we're going to be looking at the markets and the news as usual, but we're going to be looking at them in the context of non-farm payroll on Friday and why we need to be patient with our trading before that news event. But before we talk about that, over to the news from yesterday and today. Yesterday we had some positive figures on gross domestic product from Canada. We also saw some good figures on the ISM manufacturing PMI from the States, coming in at 49.5 versus a forecast of 48.5, which built on the back of the stance we've had all week of dollar strength. We also had overnight GDP from the Australians, again came in above forecast expectations, and you'll see from the equities markets we look at in a moment that seems to put some confidence back into them, a combination of all these more positive factors. News ahead today, we've got construction PMI for the pound at 9:30. We're still watching central bank member speeches, so we've got Broadbent speaking for the Bank of England at 10 o'clock, and Cunliffe also speaking for the Bank of England at 2 o'clock, so intraday traders want to be aware of that if they're trading the pound. 1:15, we've got the ADP non-farm employment change. This isn't the big one from Friday. It's a slightly different number, so it can have an influence on the markets, but it's not the one that we're going to be waiting for on Friday. Crude oil inventories could be interesting this afternoon. I've read overnight that one of the industry bodies have said that crude oil inventories in the States have increased over already record levels, so we might expect to see a high figure here, which obviously might have a net effect on oil prices. Then overnight, more news from the Aussie. It's been a big week from Australia. We've got the trade balance out at 12:30 this morning. Okay, over to the Asian markets. Here we've got the usual US dollar Chinese yuan exchange rate. We can see there is an ongoing, let's call it, devaluation after this big strengthening here. Last night, very little happening at the time that this slide was taken. We mentioned earlier about positive news events having an effect on the equities markets. Well, here an example of that. We've seen a bullish day, an opening gap followed by a bullish day on the Shanghai Composite. I believe that this talk of there being more confidence in the real estate sector in China, and that's what's potentially driving this slightly more bullish move on the index. We will remain, however, bearish until we're above this level that we've been watching all year, which is the 2015 lows. Over on the yen, even more dramatic bullish days after this 2-week period of ranging. The Nikkei has followed the American and global indices in having a really bullish day. It's back up to its 2015 lows, so we'll be interested to see if it breaks above those and we can take a bullish stance on this market again. Okay, the dollar index, as we said, it's been benefiting from the news, particularly yesterday afternoon's move. We've had a bullish move again when this slide was taken this morning. But all the markets will be indifferent over the next 2 days ahead of non-farm payroll on Friday. The reason for this is there's a lack of liquidity in the markets, so we'll see overreaction to news events, bigger movements within tighter ranges. So this is a reason why we urge you to be patient in this. Wait for the news announcement on Friday. That will give us direction. If it follows the pattern of recent news events, we might expect to see positive employment data, which could see more dollar strength, and we could see playing out in the trades that we've got on our watch list and we're in at the moment, which rely on dollar strength. One of those being the euro-US dollar trade. Again, we had volatility yesterday. The reason being is there is a lack of liquidity. I've also seen, since this slide was taken this morning, a degree of volatility within the range of this bar here. Again, all indicating that there's a lack of liquidity pre-FOMC on sorry, not FOMC, pre the non-farm payroll on Friday. So expect more of the same in that respect. US dollar CHF to Swissy. I spoke about this last night on Trading Tuesday. If we do get a significant move down on the euro, we expect to see a break of parity here. We will be looking for a retest of that, but I realistically expect it to take non-farm payroll to actually make that happen, assuming we get positive employment figures from the States and we have increased dollar strength. Over on gold, bullish this market still. We still have a mid-term view of the markets being risk off. As we know, over the last 2-3 weeks, the markets have fluctuated between risk on and risk off. This is reflected here with the indecision of gold being in this triangle. We'll not be looking to trade gold until we have a breakout and a close above this triangle. And even a close above the high here in order to get back into a long trade. There is a level down here at 1.025, which is quite a long way back down, which is a lovely level, which if we see a move back to risk on, a significant move back to risk on, is where we could potentially be seeing gold trades, the next gold trade, if it should break short. But at this moment in time, we will not be trading until we get a breakout and confirmation in one direction or the other. Here's the S&P. We've talked about the equities briefly earlier. There's a big move yesterday, driven by positive news events. We've had a close above, and then overnight we've had a continuation in that same area, which points back to more of a risk-on scenario, but again, unconfirmed at this moment in time. Liquidity will be low, so it's all about patience. Let's see what happens on Friday, the non-farm payroll. Then next week we've got a busy week for central bank announcements. We've got the Bank of Canada on Wednesday, the Royal Bank of New Zealand on Wednesday as well. Then Thursday we've got our old friend Mario Draghi and the ECB minimum bid rate, which their anticipation is that there will be an announcement of further easing in some form or another, which should play into our dollar strength, euro weakness trades. And then the week after that we've got the US FOMC meeting rate statement, which again will be a big news hit, because again it will be potentially better news announcements allowing Mrs. Yellen to give us some more indication of how she sees rate increases going forward, which would play back into our original scenario at the beginning of the year, where there was a stronger divergence between the American fiscal policy and that in Europe and the rest of the world. Okay, so that about wraps it up for today. Just a normal list here of why we can hopefully help you improve your trading results, move you to the next level. If you have any questions, general questions, you want to know more about Phoenix Blue, about how we can help you, info@Phoenix Blue. If you've got any specific questions about today's video, I'm Tom, and you can email me at tom@phoenixblue.co.uk. Okay, that wraps it up for today. Thank you for listening, and I look forward to speaking to you again in the morning. Take care.